Bitcoin has recently been outpacing the returns of our previous two bull cycles after one of our best months ever. So are we likely to continue this trend to $100,000 and beyond, or is a little bit of a cool off needed for BTC? Today we're going to be looking into whether Bitcoin could do with a little bit of a cool off and where better to start than the BTC growth since cycle lows chart we have here on bitcoinmagazinepro.com. Now, I will be honest, I was hoping to make this video over the weekend, if not first thing yesterday. So we have actually already seen a little bit of a retracement as I film this to around $91,000, $92,000 from our highs above 99,000, just shy of that big $100,000 resistance level. And if we zoom in here specifically over the previous two cycles, so I'll just hide the previous two, we can see that very briefly Bitcoin was actually outperforming our previous two cycles as we ran up to a new all-time high. We can see here that in the current cycle state, we were at 509% compared to the previous two. Even looking at the 2017 cycle where we saw this exponential run up in price action, at this point in the cycle, we're only about a 286% returns. So we have been massively outpacing the upside gains from our previous two cycles, which is pretty mind-blowing to think about, considering the diminishing returns theory is almost looking like it's being disproven here. But as we could see, we have had a slight retracement from that point, which, to be honest, wasn't that much of a surprise. I know everyone likes to see Bitcoin go up exponentially non-stop, but really anytime we run up from, let's be honest, $50,000-ish to nearly $100,000 without barely any pullback, we'll probably do a little bit of a retracement. A little bit of a cool off doesn't necessarily mean we're going to have a big 20, 30, 40% drawdown period. We just need a little bit of a chance for Bitcoin to cool off, new buys to come in, and sentiments just come back to reality a little bit. Obviously, everyone was very ecstatic with this price action. And now, of course, as soon as we've had a slight dip in price action, there's a $200 billion panic when really it's just a few percent drawdown. It's nothing to be too worried about. But where I was going to look into this video as to why we might have a retracement in the coming days and weeks, or at least a little bit of a cool off, now we can kind of retrospectively look, because it's already happened between videos, as to see why it happened. Look at the data and facts and charts that kind of outline this. So next time we're kind of getting a little bit overheated, we can look to these tools to maybe get a better understanding, remove our own biases, and kind of just look to see what could happen. So if we just look at the spend output profit ratio, the SLPR, we could see over the past few weeks, this was pretty high, to be honest. Now, this is looking at the realized profit or loss on UTXO. So we just scroll down here. It gives a little bit more of an explanation onto how this is actually calculated. But essentially, if people are moving Bitcoin at a profit, we see these green bars added. And if people are moving Bitcoin at a loss, we see these red bars added. And again, like most metrics we can see, this is probably more of a counter trading indicator. When a majority of people are realizing losses, probably a good time to buy. And when a huge amount of people are realizing profits, probably not a bad idea to take a little bit of profit, or at least not be scaling in as aggressively. I'm certainly not scaling out of my positions heavily or anything, but the risk to return when we were at $100,000 and hadn't broken above that resistance just wasn't as favorable in my opinion. And this kind of reiterates that. Lots of people were taking some profit, which is as to be expected, as we said, as we ran up pretty much non-stop from around $50,000. After nearly 100% gain, and especially considering people that were taking profit may have been holding Bitcoin since last cycle, this kind of makes sense. And if we look at something like the short-term holder MVRV ratio, one really interesting point, which if I just reload the chart so I can draw on it here, is if we just look at the oscillator side of things here, so I'll isolate just the oscillator on its own over the past few cycles, what we can see is this reached a level of about 1.33, which means short-term holders were about a 33% profit on their position, which obviously isn't too bad at all. But what we can see is around this 33% level has historically been a little bit of a turning point during Bitcoin bull cycles. If I just circle here, we can see around 33% there and there. Obviously, we have a few pumps above this, but we can see this has been a pretty noticeable point for Bitcoin to at least have a little bit of a cool off period following this. Of course, this happens during bull cycles. So if I just move this way a little bit, we can see we usually get back to the short-term hold at realized price before we have a strong rebound. So I'm not saying the same is going to happen this cycle, but there were a lot of indications that we had gone up a little too quickly, especially looking at something alongside like the Bitcoin funding rates, which was again showing that we were seeing a little bit of excessive leverage longing in the market. People were paying a huge premium to keep their perpetual futures long positions open, which again, a bit more of a counter trading indicator. When we see this incredibly positive, like we saw our previous all-time high around $74,000, a little bit of an indication that maybe people are getting a little bit too bullish, expecting the gains to continue indefinitely. And we were starting to see something similar here before we retraced slightly. And I think this upwards move that we saw from, well, when we broke out above our previous all-time high to pretty much $100,000, maybe caught a few people off guard due to how fast it really happened. But if we just go to the Bitcoin volatility chart here, we can see after we have these long periods of contraction and boring price action, I think best outlined by the 1 month or 2 week volatility chart we have here, we can see after we have these very low periods of volatility, it's pretty normal to have Bitcoin have these big explosive moves. Contraction and expansion, if you imagine a spring coiling in for longer and longer and longer, it's going to have a more violent rise to the upside or the downside. So it was really, again, kind of not to be expected, but we knew there was going to be a big move coming in BTC. And really this, while it has been a big move, in terms of percentage gains, in terms of its volatility, it's actually not, again, anything crazy that we haven't seen before. As we've come up here, we were matching probably the volatility we saw as we ran up in our previous all-time high around $74,000. But before that, we have to look to March 2023 before we saw a volatile move to the upside like this. We have, of course, seen a few volatile moves to the downside, bigger than this, but really this is all kind of making sense. When we see volatility this high, it's probably time for a little bit more of a contractionary period. We don't see volatility just spike up indefinitely. And I think another good way we can actually visualize this, if I just go to the chart here and give away what I'm going to talk about next, one other volatility metric I like to look at just available on TradingView is the Bollinger Band width. So this is just looking at the Bollinger Band, which is just a standard deviation around a 20-period moving average. And basically when they get really far apart, we can see the Bollinger Band width increasing in this oscillator we have down here. So if I just scroll down again, we can see that this was setting the highest value we'd actually seen in this metric since all the way back here again in March 2023. What we can see is this has actually started to turn again to the downside, which usually means we're going to have a little bit of a cool off period. As this comes down, maybe resets, and then maybe we can have another big move. But who knows how long this is going to take? It might be a few days, it might be a few weeks, but if I just look at the golden ratio multiplier level we have here, we can see if we zoom in, Bitcoin did reach this 1.6 green level, which we actually called out as potential resistance in our video we made last week. As we said, Bitcoin would probably struggle to break through $100,000. So we said $99,897 would be a good level to potentially lock in. And we could see that Bitcoin was only a couple $100 away from that. So again, this was to be expected. Bitcoin's hitting resistance levels after an exponential run up, after a huge period of low volatility, after a massive expansion with high funding rates. You know, in hindsight, it's always obvious, but at periods like this, the risk reward really is in our favor to continue averaging in, and taking some profit along with the other people looking at the spend output profit ratio might have made a little bit of sense, especially if we look at something like the Bitcoin Crosby ratio, which has historically been one of the best metrics for actually outlining extremely overheated or potentially undervalued periods. We could see it was giving us a buy signal as Bitcoin had retraced during our period of choppy consolidation. But now as we entered up into this upper sell region or take profit region, as we were reaching upper levels of resistance according to the golden ratio multiplier, this confluence gives us some indication again that maybe a cool off period was necessary. Once we see multiple metrics, it almost reiterates and adds to how confident we can be in that playing a part in that. And looking at a more fundamental reason as to maybe why we could have expected this, if we look at the Saylor tracker here, obviously Michael Saylor and MicroStrategy have been accumulating an unfathomable amount of BTC over the past few years. What we can see is after we had seen Saylor buy, was it $5 billion worth of BTC, 55,500 at $5.4 billion. When we see that much purchasing of BTC and price doesn't continue rallying exponentially higher, it usually indicates that there's a lot of sellers willing to sell people like Michael Saylor, MicroStrategy, ETFs, institutions. They're happy to sell BTC at these higher prices. This isn't to criticize this accumulation strategy at all, but it was a little bit of an early insight to say, well, if someone's buying this much BTC and we've not pumped 5, 10, 20%, there's obviously quite a few people looking to sell and are happy to sell at these prices. After all, it's all just pretty basic supply and demand economics. So I don't think we have anything to worry about. This isn't something that's going to mark the peak of this bull cycle. As we said in our previous YouTube video, probably around $90,000 is going to be a good round psychological level to potentially accumulate. Below that, $80,000, as we're seeing the 200 daily moving average, the short-term holder realized price coming up as well. I think that 80K will be a huge, big area of support if we were to go down even further. But really, see this as an opportunity, see this as a win-win. We've seen Bitcoin rally as we said, pretty much exponentially from $58,000-ish to nearly $100,000. If we do get the opportunity to potentially accumulate BTC at a 10 or 20% discount before we hopefully go back up, retest, and break through $100,000, then that's not going to be something that I'm going to be angry about. I'm going to be very welcoming of a cheaper discounted BTC when clearly from a longer term perspective, everything is looking incredibly bullish. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, Bitcoin has experienced one of its most volatile upwards moves in recent history as price rallied to around $100,000, that big resistance level, before we've now seen a bit of a retracement before I made all of these slides and prepared everything. And while the strength we've seen in Bitcoin has been nothing short of incredible, rallies like this just don't last forever, unfortunately. We'd love to see Bitcoin just rally to 100, 110, 150, even higher, but really, we were going to have a bit of a retracement at some point. And once we have a look at many different perspectives, like we could see in the derivatives market, the technicals, the market cycle, on-chain data, all pointing towards us being maybe a little bit overbought and a little bit overextended to the upside, it's kind of obvious that a period of consolidation, maybe a little bit of retracement in the price action makes sense. But do keep into account, this isn't to say that the cycle top is in. I'm not bearish at all. I don't think that Bitcoin has topped out or isn't going to make higher highs in the coming week. Well, months, we'll say. All I want to say is when we see these big short-term massive spikes to the upside, be prepared for a little bit of volatility to the downside as well. It only makes sense after a 100% gain. We see a 10 or 20% drawdown period and maybe a few weeks where Bitcoin is maybe stagnating a little bit, just allowing new buys to come in. But really, this is a very healthy thing to see. We want to see Bitcoin come up, make new solid foundations in price action, allow new buyers, allow new capital inflows to come into the space to grind us higher in a much more healthy fashion. If we see Bitcoin just rally exponentially, this is when people are going to realize that maybe we are overextended, more profit's going to be taken, and at some point we are going to see that result in a market cycle peak. So if we can healthily grind up, the longer, the better. It allows people to not feel that they're buying Bitcoin too high. And it allows us to maybe not retrace so much, for people to have confidence to scale in even more aggressively on the slight pullbacks that we see. So this is a very healthy thing. And over the coming months, we should be very bullish for BTC. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin, with over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on potentially looking at short-term moves in the Bitcoin market like this. Are you actively trading? I'm not really actively trading, but when I see retracements like this, it is a good opportunity to potentially start scaling in more. And at some point, we are going to be able to use these tools as Bitcoin is further and further into the bull market to potentially start scaling out at incredibly high profitable prices that would allow us to buy even more Bitcoin as the price drops and we get some discounted BTC. Or if you don't do anything like this and you think this was a terrible analysis, again, let me know. I'll reply to them anyway. Thank you all very much for watching, and I'll see you in the next one.